Hello friends. So in this video we are going to discuss about how to trade a wedge pattern. So before going to discuss about how to trade a wedge pattern, let us briefly get an understanding of what a wedge pattern is and when it comes and how it looks like. So wedge pattern typically appears in a downward trending market. So before the pattern appears, the market should be trending downwards, typically in bear markets, and then it hits a bottom and market starts slightly climbing, and then it will not be able to hold the highs. It will try to fall, but it will get support. It will eventually again try to rise, but the rise will not be much, and it will try to fall and slowly start making smaller and smaller uh, bottoms. So basically, the in a wedge pattern, the bottoms will be higher than the previous bottom, and the tops will not be that high. So let me make it a little more clear here. Okay, this is the next top in a wedge pattern. So what happens in a wedge pattern is, you connect the bottoms. Hold on, let me connect these bottoms, and then we connect the tops. So this is how a wedge pattern looks like, and it appears in a downward trending market. This is the rising wedge pattern, and this is the market that is trending downwards before the pattern appears. So as you can see here, market makes consecutive higher bottoms, and the tops will not be that high. So what this tells us is that before the pattern appeared, market was falling. It made a low here. It got support, and it tried to go up, but the resistance still played and it pushed the price down. And eventually the support also is trying to push the price up. So there is this kind of a small seesaw movement, but all this is in a rising and tight range. So this is a rising wedge, and it approaches towards the apex of this triangle or the wedge. Eventually it becomes kind of no the fight between the bears and bulls reaches a point where one of them has to break out, and most often it is the bulls who give up, because the market before that has been falling, and the bulls are trying to push the price up, but they are not able to create higher highs. I mean, decent highs. They're trying to push the price up, but every time they're trying to push the price up, the bears are pushing them down. The bulls are holding it for some time, and there will come a point where the pattern will break the bottom of this bottom line of the wedge, and it will fall, and it will make a even lower low than the previous low. So this is how it typically a rising wedge pattern in a bear market works out. So there will be another wedge pattern which is called falling wedge or downwards wedge pattern, but that is a different case. Right now we are discussing a rising wedge and how to trade it. So in this case, if the wedge pattern looks like this, you can go long with small target every time it touches the bottom of the wedge, and you have to take the profit at the top of the uh, uh, where the resistance line is for the wedge. You have to take profits here. Similarly, you can initiate short if you are playing for a short interval, that's intraday or like that, or depending on where the pattern appears. But eventually, as you approach the apex of the wedge, you have to be careful, and you have to try to short the market, because that is what the overall trend suggests. And if the market breaks down the wedge, then you can hold the shorts and you can book profit when some kind of consolidation, something like that appears. So this is typically how you trade a wedge pattern. Now let us look at let us look at the context of what I'm trying to tell. This wedge pattern has appeared recently. Uh, this is like in this week when Nifty made a low at 16,850. So let me I have shared this in the I have shared this pattern in the previous video, that is for the analysis of 20th March and for 17th March also. So this is the wedge pattern that has appeared. There was a long fall. There is a support that appeared. Price tried to go up, but it couldn't go up because of the resistance. Resistance pushed the price down. It made a new bottom, but this bottom is higher than the previous one. It again went up. So when it went up and when it faced the resistance, this high is not much higher than the previous high. Eventually it fell, it made a new bottom. This was where it ended on 16th March. So as expected, it is supposed to go up, but then because there was slight bullish momentum, it actually opened above the wedge. At this point, this top line of the wedge, this line becomes a support line, and if price falls below this line, it is a sell signal. So that has happened on the morning of 17th March. So price took support. It tried to rise up. It could not. It tried to rise up for 2 15-minute candles. It could not. Eventually, it started falling, and this is the point where you can sell the market, and you can try to capture at least this range towards the bottom line. This becomes another support. So at least when the price touches here, we can take profits in the sells. So as you can see, when the price touched this line, there was this support playing out because of the line, and price retraced up to this point. So if you had sold the market here and taken profit here, you could have gotten a decent amount of intraday profit. And after making a new high, again price faced a resistance. Actually, one can expect to take a long position here and take profits here, but because the resistance is so strong, price broke down the bottom support line of the wedge, and this is very crucial. This candle was very strong. It's a bearish engulfing. It broke down the support line. At this point, actually, according to the wedge pattern, the price should have gone down, made a new bottom compared to this one, but that did not happen in Nifty. So instead, price consolidated, and then it slowly started rising. It actually took good support here, and what happened was there was a very strong candle which broke the uh, bottom line of the wedge. This was acting as a resistance for the price, because as you can see, there were multiple upper shadows for these candles, which suggest the resistance from the bottom line of the wedge. And even after breaking also, there was a retest of the bottom line of the wedge, where price tried to break down once more, but it did not. Eventually price went up. It broke the top line also and closed slightly above. So in this case, usually in a bear market, when a wedge pattern appears, like I said earlier, price will eventually try to break down the wedge and then fall even more. That had occurred in the first half of 17th March. Price broke down the wedge. It tried to go down, but it didn't go down much, and it took support. So this support is significant, and this support has pushed the price above the top of the wedge now. So, and we are actually appearing, we are close to the end or apex of this wedge. So, like I said in the analysis for 20th March, which you can see here in the top right corner. So, as I have mentioned in that analysis, this setup looks like there could be a small gap up opening, or at least price could open somewhere here. And if price opens either if the gap up or price opens anywhere at the top, above the top of this wedge, this is the support line now, because if price opens above this line, we can expect the price to test it or if the momentum is strong, if after opening somewhere here price can go up, otherwise it can come back and test it. If it sustains and it eventually rises above, then it's a buy signal. So at this point, after a test of the support, you can buy. And if price starts rising up steadily, that is fine. But if instead, in this case, we have a resistance at around 17,200 to 20 in that region. So this will be a resistance line on Monday for Nifty. So if price hits this resistance line, takes resistance, and if it starts falling down, this can be a sell signal and take profits for the longs. However, note that the price is bouncing up after taking support, good support. So this may or may not hold the resistance. So the sell signal should be followed with a trailing stop loss or a strict stop loss of 17,200, because above this stop loss range, there isn't much resistance for Nifty. This range doesn't offer a resistance. Price can quickly go and test this level. That is 17,378, like that. So this, if you are selling here, this level is a strict stop loss. And so in this case, when you sell here or take profits in buys, if price starts falling, one thing you have to notice, this bottom line of the wedge, it is coming up progressively till here. So if at all after testing 17,200 price falls and takes support from this bottom line without breaking below, if it takes support, I'm saying, then in that case it is again a buy signal. Like I said, if it tests this line and falls, and if it takes support, this point will be another buy. So at this point, you don't need to worry about the resistance 17,200. It most likely, because it is taking the support again, if it takes, then it will break and go above. And it may or may not retest it, but if it goes above, there will be a rally all the way up to 17,370. So then you can even, if it breaks the 17,200, at this point, you can add the buys. But whatever the case, whenever you buy, or whenever you go long in a bear market, always trail your profits with stop loss, because you never know when it can take a U-turn and wipe out your profits like that. So this is the case if this upward momentum sustains, and if price happens to stay above this top of the wedge. So let us say on Monday, price somehow opens gap down or otherwise below the bottom of the wedge, then definitely all these calculations will be thrown out of the window. So in that case, what we have to do is, so if price opens somewhere here in this range between these two lines, then we have to wait and see what happens, whether the price goes up and takes support and go up. In that case, like I said, the previous analysis for trades works out. Otherwise, if price falls, then it's a sell signal. Or if price opens at below this bottom line and comes and retests it, then this is a sell signal. sell. And if price opens below, goes to test this support line, or sometimes because it's almost at the corner of the wedge, it can even go up and test this part, the top of the line, and then it may start falling. At this point, if it starts falling, you can add more cells here. You can sell again. And as it starts falling, even you have to keep an eye at this level, because this is the stop loss for any longs that might have been taken during this leg. If price falls below this stop loss level, or at this point, that it may even take some support also. So if it's taking support and going up, you better take profits in the sales. Otherwise, if it breaks this support line and falls, you can add short positions again below this support line. So we don't know how far it may fall. It may even break this bottom also. Most likely that will happen if this is the case. So anyway, this also can act as a support. So you better, I mean, at every support, you have to watch the price action. And if the price action is looking like to be a reversal, then you can take profits. Otherwise, if it tests the support and if it breaks down, then you can continue holding your positions, short positions. So this is the kind of trade setup that you have to follow if the wedge is broken downwards. So we don't know because see, usually in a bear market, when a rising wedge appears, it is a kind of bear trap where the price looks like it is going up. People will feel like, okay, there's going to be a rally happening, but eventually it will fall down below the edge, break down below the edge, and it starts crashing. But in this case, Nifty has taken very decent support here. So this support is significant. Unless this support is taken out or the price falls below this level, we cannot say for sure that Nifty will be making a new low. And also one more thing is to notice, the price went and closed above the wedge. So higher probability for the market to consolidate or go up above this line. So we have to observe what happens during the initial first few 15 or 30 minutes of Monday market, and accordingly the market will tell you whether it's falling or going, it is consolidating or it's going up. Then accordingly you can initiate the trades and book profits at support or resistance levels. So that is how you have to trade a wedge pattern, rising wedge pattern, depending on whether the breakdown is sustaining or a bullish rally is sustaining. So we'll again meet up with the analysis of another pattern when we see in the market. So until then, I hope you like these videos. If you like the videos, do subscribe and hit the bell icon for regular updates. And we'll see you again in another video. Thank you.